This is Martin from Sept, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at the technical charts and try to understand what exactly happened in the market during the previous week, and also look forward for the better trading plan for the upcoming week that's starting tomorrow, September 2nd, 2024. So we would first move in to the charts and come back to summarize it later. So this is how the weekly of the Nifty index looks like, and you can clearly see an ascending wedge there and prices at the top once again after a small dip. This is daily charts that you see. There also you have a narrowing ascending wedge, and the price is moving up towards the top of that. As you can see, market is at all-time high. This is the Banknifty weekly and the daily that you're seeing here. Left side weekly shows an even more narrowing wedge, but price is not at the top of the wedge on the weekly basis, and the daily charts showing it's within a trend line channel, and it is a long way towards the top of the parallel channel on the short term, right? So that's how market looks like. So what happened last week? It was another new all-time high. It's 1.65%. That's 410 points up, further up, and the fourth consecutive week of new highs and fourth consecutive week of recovery after a small dip. And index has made new all-time high, and it sustained that above the 25,200 is the index level as of now. Can you believe that? It's 70% rally from June 2022, the last major swing low. But some kind of correction happened after major swing low. It made 70% nearly. It's at 31% just the last 1 year. It's on the upside, and 16% in 2024 alone. The market has moved up. Remarkable breakout. Euphoric rally is what we could call. And if you look at the banking index, it did close with 440 points up. It's less than 1% nearly, and it managed to sustain above the 20 exponential moving average as well. But it was volatile, mostly small dips and ups, and it was range bound, and no big breakouts could be seen, even though it gained 400 points. It was seen that it's still quite far from the previous all-time high for the Banknifty. So, but the Nifty, there's some lag in the Banknifty, but still, the bullish close when the Nifty kept on making new highs previous weeks and made new all-time highs. Well, Banknifty is slightly lagging. If you look at the candlesticks in the pattern, these are the things: a wide range bullish candle on the weekly. Yes. Bullish candle on the weekly in the case of Nifty, and short term you have some indecisiveness because it's a spinning top, small body spinning top at the very top, slightly dangerous. Some caution is being called out by the charts with that short term small body spinning top candle on Banknifty. Also the same, bullish candle on the weekly time frames, and the daily has a small body, which is kind of a spinning top. It's indecisive. Any small body is indecisive, and spinning top is when the wick size is almost equal on both sides and it appears in the top of the big rally. It calls out for a reversal. Since this is in a daily time frames, the reversal could be a small one probably, but yeah, extremely bullish. The lower high on the Nifty is no longer there. It is back to all-time highs, but lower high still seen, not negated edge on the Banknifty. But we have a 20 exponential moving average that will close on both indices now. And if you analyze the Bollinger Bands, you could see that right, it's an expansion of the upside on the Nifty, but it's not an expansion it's a consolidation of the Banknifty Bollinger Bands. Consolidation with the bullish bias because it's above the median, but extremely bullish, and more upsides could be expected because of the expansion of the Bollinger Bands on the Nifty, and probably because of the bullish bias, this contraction of the Banknifty also may turn out to be expansion on the upside, right? If you look at the candlesticks, see this weekly wide range bullish candle. It's a breakout, it's a closer consolidation in this, and eventually drop out, right? That breakout could extend as high as the height of this consolidation box. And if you can see, it's a green, not wide range, but yeah, definitely a bullish close. And it's a third consecutive week of high, and it's a fourth consecutive week in the case of Nifty. Short term, you can see that it was higher highs that was made on every single day with a gap up on Nifty on the Friday. And Nifty, it was last 5 days, if you see, it was up, down, and up, right? So it was very volatile and range bound, you can say. And breakout did not really happen there, even though we have net to net week to week basis close this green on the Banknifty as well. So that's the story. Let's try to understand how the momentum in the trend has performed. So we have momentum that's extremely bullish about the RSI 60 on both time frames, daily and the weekly, both in the case of Nifty. But in the Banknifty, it has successfully climbed in the short term momentum in the bull zones, but in the medium term it is yet to catch with it. When it comes to the ADX, the trend indicator, in the case of Nifty, it is bullish definitely and rising, no doubt about that. But in the case of Banknifty, it is still to recover the bearishness as far as the trend is concerned, but it's reducing because it's falling trend strength of the bearishness. So eventually it might catch up. The thing is, the trend and the momentum has picked up and moved in the bull zones in the short term in the case of Banknifty. So, right, so Nifty has already done it. Banknifty is on the way of making it happen. That's what I can make out for the momentum and the trend indicators, RSI and ADX. We had the volatility index Nifty, the index VIX, India VIX, has moved flattish last week. It remains well, more or less 1% range, and it's 13.4. Nearby still in the low volatility regime, you can say. So that's about momentum, trend, and candlesticks and price pattern. That's how it performed. Now let's try to understand how the open interest with respect to the futures and options derivatives. So it's a futures showing a long build up and the short covering on the Banknifty. So both are kind of bullish. So in the case of open interest for the options for the next weekly expiry on September 4th and 5th for Banknifty and Nifty, the weekly expiries, the put call ratios are bullish, extremely bullish in the case of in the case of Nifty, that's 1.27, but it's lagging behind below the 1 PCR. That's kind of bearish. Not exactly bearish, but not bullish enough, we can say. Not bullish enough on the Banknifty put call ratio and options OI. But futures OI short covering in the Banknifty also, so that they're both long. So overall it's bullish, but Banknifty is lagging behind the open response, just like the price action is showing. Let's try to understand what the support resistance levels are there based on the charts that you see on the top on Nifty and Banknifty, and also based on the open interest that we had seen, right, on the options. So that we can derive a level where the probability of resistance and supports it and take a positions accordingly. So the Nifty, we have a range of 6,000 points. That's 25,000 is where the highest support is there. 26,000 is where the highest resistance is there. So price can hover between that range is called the option sellers are telling as per the open interest. Now the second highest support and resistance is seen at 25,200. That's where near to where the Nifty is there right now, and 26,000 is where the second highest resistance is there. 25,700 is where the second highest option is there. So wide range at the very top, right? We still have 7 days left for the data from the options to change. A lot of things can happen, but that's what as of now what it's showing. Banknifty operators is showing 51,000 and 50,000 where the highest support and resistance is seen, where the highest put writing and call writing is seen basically. So that's one. So not a very wide range, just 1,000 points. Second highest put and call writing seen Banknifty at 51,000 and 52,000. Right, PCR and YI built up, we already seen that. So the levels are pretty much clear. So if you look at the support resistances as per the technical charts, you can see that the first resistance would be it's an uncharted zone, right? It's at all-time high on the Nifty. So the first resistance would be its Fibonacci extension level of 38.29, which is coming close to 25, 325. Right? That's what this. After that, you have the 50 exponential moving average at 25,750, somewhere that zone, right? 770 to be precise. But you have a big rounding number, 25,500 also coming in between. That would have resistances, right? That's what Nifty is now. Now, Nifty itself, for the support. So for support, there's a gap that's from there, a very narrow gap that's coming near the 25,200 zones or something. So you can ignore that mostly, but that's a zone of support. So the first major support zone would come in at 24,850 zone. 100 points below 24,750, you have the 23 Fibonacci extension level, and a confluence of that with the 20 exponential moving average at 24,750. 24,750, 24,850 is a major support zone. So from 25,000 to 24,750, that is a place where the major supports can come in. If at all there is a reversal happens, if that is breached, the next support will be at 24,472, where the previous breakout zone could act as a support, and then bounce up can happen. That is also breached, then 24,340 is where the 50 exponential moving average support is there. The previous that will take you to the previous swing lows that's coming at 24,000. So that's what it's showing, right? Supports. Banknifty, based on the charts, the levels would be, the first support would be 20 exponential moving average, and the 50 exponential Fibonacci extension, Fibonacci retracement levels, and the 20 exponential moving average levels, and the 20 and the 50 both all are confluencing a lot of support here near to 51,000 is what you can make out. 5850, 5950, 51,000. That's a great support zone. 51,150 also is a good support zone. So first 51,150, then 50,000, and then if that is breached, it goes to the 50,000. That's a 1,000 point fall. Right. That is also breached, then you can go to the swing lows at 49,650. That's all the supports are there. On the upside, first resistance would be at near to the 52,000. That's 51,978, where you have the previous resistance zone is there. That could act as resistance now. Then after that, 52,850, right? Then 53,000. That's what Banknifty's levels are there, supports, right? That's what is put in there, making all of this. Let's move ahead. We'll try to understand how the different sectoral indexes have performed. So overall, you see it's quite green breakout moves that you can see in the IT, in the reality, in the pharma, all 3%, 4% kind of up moves, and then the only sector that closed negative was slash flattish close at less than half, nearly 0.5% down move in the FMCG sector. Otherwise, all other sectors, IT, metal, auto, pharma, reality, everything moved up, big moves. But what are those sectors that are longish? It's the IT sector, it's the auto sector, it's the pharma sector, and it's the FMCG sector. So except for metal and the reality, all the sectors are ready to be longish. This is based on the RSI on multiple time frames on daily and weekly. Right? You can see the details of that. Different sectoral indices right here. You see a breaking out Nifty, a cup and handle breakout of the IT index, and you have the metal index, which is retraced to the median of the parallel channel and then trying to move once again. So there is likelihood of that once again going in, hitting the top of the channel. That means momentum can climb into 60 RSI and above. But right now it's below, and then it's sideways. You'll have to wait, but you can anticipate a more up move. What is it? Is at the top, retrace slightly on the top, and then once again getting back there. Finish momentum and trend in both time frames. Pharma breaking out extremely all-time high levels, high rising momentum in the trend. FMCG, small consolidation at the very top, momentum trend absolutely indicators showing bullishness. Reality sector did a recent pullback. Just fallen to the sideways, so slightly trying to climb back again. So except the metal and the reality, all other sectors are extremely bullish, you can say. Ready to be longish on those sectors. If you try to understand the different heavyweight stocks that contribute maximum to the index, Nifty and Banknifty, right? Nifty basically. So most contribution is by the HDFC Bank, which is consolidating. Huge volumes at the end, definitely bullish, but slightly it had fallen to the sideways and still not climbed back to the bull zones on the other side, about 60 yet on the HDFC Bank. So HDFC Bank had hit earlier the all-time highs and then fallen back. So the consolidation continues. Lions also had fallen back slightly in the sideways and they're trying to climb up. So we had kind of flattish close last week. The momentum sideways. So ICICI Bank, that's the sector that's ever bullish, and it's once again moving up RSI after taking a support of the 60 zones and then heading towards the top of the channel with the solid green. Momentum and the trend both are bullish. So ICICI Bank green. IT stocks Infi and the TCS both breaking out with bullish momentum and at all-time highs. And Kotak Bank as usual sideways. ITC was an FMCG, all sector didn't do good. Same happened, but momentum is bullish in the case of ITC. Trend is also shown the immediate term. So overall, it is the IT ICICI Bank, and the ITC. These are the three or four stocks that's holding the market, and would slightly pulling back the HDFC and Reliance last week, if you see. That's all. Well, industry heavyweights are all performing good. There are heavyweights that's holding the market, and there are others which are remaining in the sideways, and none of them are in the bear zones with respect to the moment. If we try to look at the broader markets, the mid-cap and small stock indices are once again at the all-time highs. Absolutely no crazy moves, non-stop moves, and momentum and the trend both are bullish. So that shows the bullish moves. The bulls are across, in all the different sectors and across all the different, market capitalized sectors. We try to understand the institutional participation. We see that if I said net buyers of 10,000 crores in this week, last week, following the Fed interest rate dovish tones that came in after some symposium or meeting that previous Monday or Tuesday. So following that, FIs returned buyers, which is very good. But DIs, as usual, were booking the profit, and they also managed to be buyers this week as well. So combined together, it made a new all-time high. Net longs and derivatives also is showing bullishness. The FIs and FI just moved up. If you look at the FNO, FI data, you can see that in the futures, FIs are bullish. The options, but in the futures and options, retailers are not that bullish on Friday. This is Friday's data. This is FNO data. So you can see the days have been buying. Now they booked the profit and then made some selling. But now the FIs have been selling. Now slowly started buying. That's what you can see, which is very positive participation. Moving ahead, if you try to understand the global markets, the commodities, and the currencies. Beginning with the currencies, we have a dollar that's slightly 1% up. It's at 101.73. It was going down heavily, nearly 6.5%. It was falling down from the previous highs, and now it's having a momentum that is bearish actually, but it's rising once again after it has found a support zone. Look at this on the right side. You can see that the US dollar index is happening. This has been consolidating in the range for long. It was moving down 6.5%. Now it's taking a support and seems to be found a support and then moving up. Momentum has fallen to this bear zone. So dollar is still having trouble, but this week it showed some attempt to recovery, but momentum is still bearish. Now with respect to the USD now, we can see that it has broken out of that long consolidation and trying to get into the 84 kind of levels, but this week we had a flattish close at 83.84. Momentum has climbed to the bull zones, so long way to go, but it's central bank managed, but rupee is weak and remains weak for very, very long time. Crude oil had fallen, consolidating at the trendline support zone. Momentum also at the RSI 40 support. So positive for no oil importing country like ours. Gold is remaining at the very top, very close to the all-time highs, but a very weak overall. 0.5% down last week. 27% of up move is what we have seen in the gold since last swing lows. So gold is not breaking up, has not broken out and made new all-times last week, but it's already very close to that. So gold is also high, market is also high. Gives a slight bit of concern, but yeah, as a hedging instrument, that's a good thing. If not a crash happens, gold can break out from there. Crude is remaining good, but rupee is weak, it's not that great. When it comes to US market, however, it is green, and although it is this flattish closest that you can see in the Nasdaq and the S&P 500, Dow Jones moved up. So Dow Jones at the all-time highs. See the US market indexes. Dow Jones, Nasdaq, and S&P 500 all are mostly green except Nasdaq, which is close flat. So it's an all-time high. Momentum is in the bull zones on all three of them. So US market is all-time high, and it is completely recovered of a small dip because of some Russian fears or that's all negated after the Fed speech. Now, two action levels. One is emphasis in IT sector is breaking out. It's at the very top. An inverted head and shoulder pattern breakout could be seen towards the all-time high. Decent monetary to RiskReward can be seen there. Volumes are good, momentum is good, trend is good. But as fins up also, inverted head and shoulder breakout could happen. If you make the entry, the monetary to RiskReward can be looked at. Volumes are good, momentum is good. Good in the sense momentum is in the bull zones. Trend is also in the medium term. Bull zones and rising up. So that's emphasis in the IT sector. But that's fins from financial services. Potential for longish swing trade opportunities that could extend to 2 to 3 weeks max, right? So it's a two stock picks. It's around recommendations. You may take your positions or not position based on your own conviction analysis. This is my way of putting it for an education purpose primarily. But yeah, reasons for such longish view is also explained. So hope it makes sense. So therefore now you have a bull call. It's not a bull call, it's bear calls calendar spread. Calendar because looking at values the volatility. So basically we are selling at 250 call, which is almost near to the ATM call. We're selling that, and then you're hedging it with the next to next week, right? The next to next week of hedging is what is reduced. So probability is good. That's what not that great, but decent enough if you exit early. And above all, you're getting a decent range of 24,500 and 25,500 nearby. So price is expected to consolidate at the level after the big breakout. So you're not losing much if it falls also, but if it is falling too much, just exit at the loss. And the loss is also not that much. And capacity pushes this completely risk behind, and margin premiums requirements are very less, and increase your lot size and portion size as per your capital size and your appetite of risk, right? So that's a weekly F&O strategy. It's a bear call calendar spread for the next week on Nifty indices, right? Let's try to wrap it up. So market has broken out once again. It made the all-time highs, and not only that, it made a solid close about 25,000 and 25,200 as well, and it's a fourth week of consecutive new highs with the moment with the trend extremely bullish of Nifty. Bank Nifty also made green close with again in the moment of the trend, but still slightly backing band with respect to open interest and the options, and then with respect to the price action and trend and momentum also slightly lagging behind, but it also has made positive gains last week. Lower high, lower low, lower high, lower low is still valid in the case of Nifty. In the case of Banknifty, Nifty it's no longer there, but positive that both of the indices close about the 20 exponential moving average. So It's only a 10 to 11% of correction that has happened so far from the previous swing lows. It's at 38% of the bank Nifty in the 50% rally from the March of last year. Multiple breakouts of flag and rounding patterns, cup and handle, and all this we have seen in the chart. So remarkable rally is what is going on. Let's try to put together different factors that's in favor of the bulls and the bears. Everyone's in the buying mode. Let's bucket it in the bull side. Mid cap and small cap in the broader markets at the all-time highs. Futures are longish with respect to the open interest, and PCR on the options OI is also bullish. In the case of Nifty, US market is at the all-time high. Green momentum is bullish in the US markets and all that. Green close above the 20 expression moving average in both indices, and Nifty is bullish momentum and trend. Heavy stocks are mostly bullish or sideways. Nothing is in the pair zones. Most sectors remain bullish. Most sector indices we have seen that it's bullish, except for the royalty, which is set to climb back into sideways. And the bullish bias expansion is here on the Nifty's bullish bands and in the short term. Right. So if you look at the bills, lower high pattern on the Bank Nifty, sideways momentum and medium term bearish trend is concerned the Bank Nifty. Recovery is said to happen, still happening. PCR is still bearish, less than 1 with respect to the option OI, and there is an ascending wedge, and we are at the top of that. Right, you have to be careful. Market is heated up. So friends, we're taking long positions at this point. If you're only taking install tight stop loss, brutal exit is what is required because there is a retracement that happens. Those falls can be very, very sharp if it all happens, because market is, we know how much market is more of light. So technically market is at the very top, a short correction and a quick climb back. That's what has happened, and same could continue, right? So we never know when the deeper corrections come in, but as of now the charts are saying that, my view has to be mild bullish. So global cues could cause black swan events when it comes to the pandemics or war or interest rate hikes and all this. Markets could turn suddenly big volatile, so you have to be cautious about that fact. Uncertainty is is something that you have to live with in the market, not just the market, in the life as well. And that could negate all the technical analysis, right? So all that can be done is to exit with whatever loss, and then save the remaining for another good term. And if you fail to do that, you don't have capital left for another day's play. And the Fed speech outcome for potential September rate cut and the MCSI rejigging of the Morgan Stanley's index and all that, good upside boost can come in more in the market. That's what it indicates. Money is flowing in, mutual fund money is coming in, and there is no major bad news in the bad cues that's highlighted in the last week. Right, things could change all of a sudden, but as of now things looks okay with respect to the global cues as well. As of now, all markets across the world is more above the Fed speech. So the levels for the next week is 24,500 to 25,500, 1,000 point range, and 50,000, 53,000, 3,000 point range for the Bank Nifty for next week. So as long as this 24,000 and the 50,000 is kept, we can always hope for another leg of the market. So if that is breached, then we have a trouble. But we are at about 25,000, so it can be optimistic, but we have to be cautious. So we have to have hedges everywhere whenever you're dealing with the markets, right? Portfolio level hedges, percentage level hedges, and without hedges, if you play, you may get wiped out. So be careful about that. And so using this hedging strategies in the options, especially different strategies like covered calls and cash calls, all these are there in the playlist. Apart from this weekly analysis, you have a playlist where a lot of good videos are there with different strategies. You can check out that. That's all I have for the next week. If you like the content, subscribe, put in your feedback, comments, share it to other friends. Right? I'm also active on other social media channels like X and all that, but I'm more active during the weekdays. So if you want to subscribe there, you may do that. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.